Property management chart of accounts. What is it and why is it essential? One of the most important steps for any business, whether you're just getting off the ground or you've been around for a while, is setting up and keeping a property management chart of accounts. As a property manager, your chart of accounts will help you keep tabs on every transaction for every property in your portfolio, every rent payment, every asset, and every bill. It'll also keep an accurate record of your own income and expenses, from overhead to licensing fees. So, how exactly do you set up an effective chart of accounts? In this video, we'll walk you through setting up a chart of accounts for the properties you manage and discuss some best practices. We'll take you through some sample charts of accounts and give you a breakdown on QuickBooks versus our purpose-built accounting software for property managers. Let's get started. First things first, what is a chart of accounts? A chart of accounts is a record that organizes each transaction made for the properties you manage into accounting categories. These categories help you separate what you spent from what you've earned and the cash you have on hand from your expenses. Transactions fall under one of 5 overarching categories: assets, liabilities, expenses, income, or equity. Assets include checking accounts, savings accounts, and properties owned, whether they're your assets or your owners. Liabilities could include refundable security deposits, credit card balances, and taxes or insurance owed on properties, anything you're going to have to pay out down the road. Income includes fees paid to you by owners and tenants or other sources of revenue. Equity entries typically include net income, retained earnings, and any contributions or distributions made for your properties. Each property gets its own coding system within your chart of accounts. Put those together, all of those accounts become your chart of accounts. Every transaction is coded, and the codes can get pretty granular, but that's a good thing. By giving each transaction for each property a specific code, it's easy to keep track of where every penny is going and which of your properties are making or losing money. But before we get into coding, let's dig a little more into organizing your entries. A chart of accounts is set up in a hierarchy of entries. You might even think of it in terms of a parent-child organization. The highest level entries would be the 5 we already discussed. Do you remember what they are? Then each of your transactions would be grouped as children underneath. For example, under the parent category income, you might have child categories for rent, amenity fees, or HVAC fees. Meanwhile, payroll, licensing fees, and electricity would fall under expenses. Now let's talk about coding. Many experts recommend numbering line items using ranges of 1,000. For example, income would be assigned the high-level number 1,000, and all income would be coded between 1,000 and 1,999. Each high-level category owns a range of 1,000. Under that, you can assign different subcategories their own numbers. Under income, rent might be 1,100, and under expenses, electricity might be 5,100. Make sense? Finally, you'll need a way to identify which income comes from which property, while leaving room to add for future properties. To keep line items straight, make sure each has a clear and brief summary. Something like this. Now that you know what a chart of accounts is, let's talk about how you can use it to keep your property management business on track. In the days before computers, each transaction had its own page in a ledger book, recording income, expenses, assets, liabilities, and equity. At the bottom of the page, the numbers for each transaction were tallied. To get a total picture of profits and losses, an accountant simply had to add up income, assets, equity, and then subtract expenses and liabilities. First, start inputting every transaction that comes through your business. You can do that manually, sure, but that's going to get really cumbersome really quickly. Now is probably the time to look for a software solution that will automatically turn your rent payments, bills, invoices, and other entries into line items in your chart of accounts automatically. Take a look in the description for a link to how Buildium's property management accounting software automates entries. Once you've started recording your transactions, you're going to have to reconcile them with your bank accounts on a regular basis, most likely monthly. Again, you can do this manually, going line by line to check each number against your various bank accounts, or you can use a software solution that automates it for you. And yes, Buildium can do that too. Just look for the link below. At the quarter and year level, your chart of accounts with every dollar you earned and lost will take a lot of the time and headaches out of filing taxes and reporting, even filing your 1099s for your vendors. And you guessed it, Buildium can do that. Link. Okay, that's the nuts and bolts of a chart of accounts. But how can you use it to help expand your business, to grow more with less, to build your portfolio, and to help your owners grow too? Let's take a look at how. A chart of accounts is the backbone of all financial reports and forecasting you can do for both your company and the properties you manage. It allows you to report the financial health of properties to owners and boards, determine rent and fee increases, and forecast marketing, staffing, and other budgets. With a well-maintained chart of accounts, you can pull data on profits and losses for rental owners and association boards. Do this by poring over your spreadsheets and pulling numbers, or use a software solution that organizes data automatically and helps you filter to look for patterns. Use your chart of accounts to look at the profits or losses your properties are putting in. Compare rent or fee rates to the market in your area and determine when and how to increase your own. Use your chart of accounts quarterly and annually to look at the health of your company and the properties you manage. Based on your revenue and rate of growth, forecast your budget, hiring, and expansion moving forward. Once you get a chart of accounts up and running, set up a training session with members of your staff explaining the coding system. Then, it's time to get some best practices in place. Here are 5 steps you can take to make sure your accounting process is a well-oiled machine. Best practice number 1. Assign a single process to update the chart of accounts. A chart of accounts is definitely a cooks in the kitchen situation. Too many people accessing and adding entries will only cause mistakes and chaos. And by too many, we mean more than one. Your property manager should be submitting entries and changes to a single person for approval, and that single person should make submitted changes themselves. Best practice number 2. Update frequently and consistently. Get your team on a regular reporting schedule. Give them deadlines to get all of their transactions in. That way, there's time to update and reconcile by the end of the month. Best practice number 3. Stick to your coding system. Of course, you'll have to add new line items for new transactions, but each new item should be sorted into existing categories that follow the coding system you set up. Best practice number 4. Record absolutely everything. Don't keep anything off the books or even in a separate chart of accounts. Record every single transaction in the same place. Taxes, compliance, property forecasting, and investment decisions all depend on a complete picture of your property's finances. You probably have a junk drawer at home, right? That one place to throw random stuff you don't know what to do with. When it starts filling up, you end up spending the day figuring out what to do with all of it. The same goes for your chart of accounts. While you may have some miscellaneous income or expenses, you shouldn't use a miscellaneous category as a catch-all for transactions you just don't want to deal with at the moment. You'll end up with a mess that'll be tough to reconcile at the end of the month, quarter, or year. Now, accounting software that's purpose-built for property managers makes setting up a chart of accounts that much easier. Right off the bat, it'll include a chart of accounts template with fields that cover categories specific to property management. Second, purpose-built accounting software should be integrated with all of your billing, invoicing, and payment portals, so you don't have to enter transactions yourself. Third, purpose-built accounting software will help you automate taxes and 1099s. If you want to learn more, click the link in the description and read all about how Buildium's accounting software stacks up against generic software such as QuickBooks. Okay, we've taken you through what a property management chart of accounts is, why you need it, and how to set it up. We've also walked you through the advantages of a purpose-built accounting software solution like Buildium. That was a lot, but we think you've got this. Now, go get out there and start accounting. If you want to learn more about how Buildium can help you control, compete, and thrive, subscribe to our channel or check out our blog. Thanks for watching.